Hello, traders. Gary Wagner here. Approximately 2 o'clock in Honolulu, 8 o'clock in New York. It is Monday, May 17th, 2021, and this is the daily report for gold and silver. And what a day we have seen. $30 rise in gold, tremendous rise in silver. We are along copper also. That continues to move up. And so we had an exceptional day in terms of putting trades on because we bought the open. All of that information will be contained when we look at our technical studies during the show, which begins now. Traders, if you recall from Friday's show, our weekend review, which was titled Gold is Still Range-Bound, but Market Sentiment Shifting to Bullish, we talked about the fact that we wanted to take a close look as it opened up in Australia, which is Sunday here in the mainland, and specifically New York. We saw it begin to move up in Australia, Hong Kong, and London. We made the decision to buy the open Monday morning. We sent out a trade alert to that effect. Gold opened basis the June contract at 1846. Because we were able to buy it at such a good price, we were able to put in an effective stop that really limits risk even if the market came down because we put it in at 1838. Currently, we have gold trading in Australia. It's off by about $1.20 from the $29 gain, but it is at 1866 after buying it at 46. So we effectively picked up $20 on our first day of entering the trade. A truly exciting day for gold bulls all around the world. We witnessed a major break to the upside. And we talked about this on Friday because the thing that troubled me the most over the last, call it, 5 trading days was this tight range-bound area. But traders, we've seen this before because the real style that we have witnessed within gold itself has been a series of stair steps. And within those stair steps, you get a price ascent, market moves sideways, then you get another spike, sideways, then a big spike. And each of those periods were periods of consolidation. And that includes what we saw over the last 5 trading days. What was interesting is that in this particular case, we had earmarked resistance starting at 1844. That is a 61.8% fib retracement, and the 200-day moving average, which is critically important when judging whether or not a stock or commodity is in a long-term bullish or bearish trend. We can also see sideways action occurring at the 50% retracement point. We also had data suggesting that that was a strong price area. The double bottom really didn't match anything in terms of a fib retracement, but a double bottom by itself is very important. Here's what we saw. When we saw it begin to trade higher overseas, our idea was, as we said on Friday, if we get a break above 1845 to 1857, that's a 200-day, and the fib retracement level, we have to enter the breakout. If it opens and trades lower, then we would look to see it go to the bottom of the range. Fortunately, we did in fact see a major upside move. We, by buying the open, got in at a fantastic entry price of 46. And as I said, we're currently at 67. Where can we expect it to go? Well, let's take a look at different resistance areas. 1880 is a possible minor resistance area, and seriously, it's only based on these stops that come in, but there's quite a few of them. So we've got a price point in an area. Here it's scaled straight up, and when it came down, it came straight down. So the major resistance is going to occur at 2 price points. First of all, key psychological level of 1900, and then secondly is going to be just above 1928, with the actual number between 1947 and these tops here that come in at 1960. And the reason that I adjusted it is, if you recall from that former screen, it was showing a 75% retracement. We use a 78% retracement. So 1900 is a key psychological level, and at that point, you don't really have a lot of data sets. Our target would have to be around $1,950. I think we've got an excellent trade that has great profit potential. We also sent out a recommendation to go long silver. In the case of silver, we are trading the July contract, SIN21. That opened at 27.52. Currently, we have the market at 28.28, and we have placed a stop at 27.49. Maintain your long futures positions in both gold and silver. Traders, silver had a phenomenal move today. We will spend more time on this technically tomorrow because I don't want this show to stretch on. We do have the highs that come in near a recent top, so we do want to be concerned with that. That's the first thing. And the second thing is that price point is also the 23.6% fib retracement. We want to watch it very carefully because if there is resistance in silver at this area, we could see a little pullback before moving higher. If it moves higher tomorrow, though, we have got to be looking at $30 as our initial target, and I think that that's highly achievable, assuming, of course, that we break through this level of resistance because it is a harmonics. We have a data set that comes in at that price point, and it is a fib number. Maintain your current long position in silver, maintain your stop. Concurrently, we also bought the ETFs, the iShares Silver Trust and GLD. We're looking at the open of iShares Silver Trust, and that opened at 25.56. We have a stop at 24.60. As far as GLD goes, that opened this morning at 173.30. That is our entry price, and we have a stop at 168. And traders, lastly, is copper. Copper has been a slow and steady mover. We have gotten in at an excellent price right around 55. It is at 72. I talked about a key area that it needed to hold, or I think the way I put it is I would like to see it hold. It did hold that area. It did move up today. Maintain your long copper position. We're long gold, silver, futures, Forex, the ETFs, as well as copper. We have got a full palette of trades that are, at least for now, all in profits, and that pleases me very much. I hope that it pleases you just as much. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.